Hi, Michael.
Hey, Bill. Nice to be with you.
This is fantastic. Okay, we'll get right into it, Michael. I've talked to many heavy hitters around this conference, and they're all saying the same thing, which is this feels like a momentous occasion, not only for Bitcoin history, but for American history. Can you say a little bit more about what other potential inflections could be ahead for Bitcoin?
Yeah, well, first, let's not run over that comment too quickly. This is the biggest week in the history of Bitcoin. So this is a big deal. I mean, this is the week when we have 2 of 3 presidential candidates. You have a former president, perhaps the next president here. As Trump said, 10 senators, a lot of congressmen, governors, and the amount of media attention is profound. So this is it's a coming out party for Bitcoin, I think, and it's extraordinary week because they recognize the political power of the community. They also recognize this as a technology critical to the success of America and of global significance, and so I think it is a great week. This is an inflection point. And before I tell you the next set of inflection points, let's talk about why this is an inflection point. This is an inflection point because there's a subtext here, an implication, and the implication is Bitcoin is digital property, Bitcoin is property rights, Bitcoin is ethical, Bitcoin is technically sound, Bitcoin is economically sound, Bitcoin is an instrument of economic empowerment, and the establishment now agrees with you, right? And we all knew it 4 years ago, but it would have been not clear the establishment knew it. The mainstream media in 2020 didn't even cover the industry. And so I think that this is a wake-up call this week to the mainstream and the establishment around the world that Bitcoin is here to stay, and Bitcoin is the future. And I guess the other thing that I don't want to not comment on is the speech we just heard is profound and historic, right? It's pretty important because if you listen to what Trump just said, he said, we're not going to sell our Bitcoin. You do not sell your Bitcoin. That recognizes that, you would never say this about most criminal proceeds that you seized, right? Actually, the truth is, if the United States seized a car, if they seized a drug shipment, if they seized a crate of foreign currency, if they seized pesos, if they seized euros, if they seized paintings or collectibles, if they seized your house, they would sell it, right? I mean, the normal thing is to auction off any kind of that property. So the fact that he would note that it's going to be the policy of the government not to sell it elevates Bitcoin as property that is economically superior to all the other property. So first we have an endorsement, an acknowledgement, Bitcoin is property. And if it is property, you have property rights to it. The second thing is it's better property than that other property, and I recognize it. The third is we're going to create a national United States Bitcoin strategic reserve. That's a big deal. That's a big deal because, we go from Bitcoin being something that's toxic that you want to get rid of to something that is virtuous that we want to hold on to. So I think that that's a profound thing that just happened. I think that Donald Trump's acknowledgement that the Bitcoin community is full of intelligent, ethical, hardworking, creative, inspired individuals, the kind of which that made America great. He pretty much said that the people that created this great country would have been Bitcoiners. He said the founding fathers are Bitcoiners. He said everybody that came to America is a Bitcoiner. And what he's acknowledging is whereas once the United States was the new world and it was risky and dangerous to come here for a better life and property, now Bitcoin is the new world. And it's risky and dangerous, and people have suffered, like Ross Ulbricht, to come here for this property. And he recognizes that, he honors that, and he's willing to actually stand up and tell the entire world that will be an observation that ripples everywhere in the world, throughout the establishment and throughout other governments. And there's going to be a bunch of German politicians looking at that, saying, well, if the U.S. is not going to sell its Bitcoin, we must have been pretty stupid to sell our Bitcoin. And I think that's big move forward.
So a variety of proposals now. We had yesterday RFK proposing to buy millions of Bitcoin. Different level of commitment today. What sort of policies would you think could potentially improve Bitcoin and its trajectory?
I think that there's the big three. There's three policies that accelerate us to institutional adoption. That three things that take Bitcoin up by 100x from where it is today. The first thing is to legitimize and accept and endorse it as an institutional grade asset. So fair regulation of the asset itself in the securities industry. And in January, we got the first installment of that with the approval of the spot Bitcoin ETF, but it was an incomplete regulation because the SEC still denies in-kind creation of ETF shares, and the SEC still denies the ability to trade options on top of spot Bitcoin ETF shares. And the acceptance was given grudgingly. It was basically, I did it because I had to do it, but I didn't like it. Okay, so what's the significance of that? The negative opinion expressed when the approval came, that sits as a shadow over a lot of mainstream investors. We need to flip from a negative opinion to at least a neutral opinion. Like, why is it that a federal regulator isn't expressing an opinion that this asset is good or bad versus that asset? So I think that's got to change still. I think that the lack of in-kind creates and redemption means that it's a taxable event if I want to contribute Bitcoin or withdraw Bitcoin from an ETF. So if you were to invest in an ETF and it 10x'd and then you wanted to take your Bitcoin in self-custody, you're getting charged 30% of the Bitcoin. If you wanted to move the Bitcoin from an ETF to a bank or to another custodian, you're getting charged as if you sold it, even though you didn't sell it. So right now, there's a tax inefficiency, and that's hostile. Whenever you tax someone to vibrate remember what I talked about, vibration and frequency. When you tax on the trade or on the transformation, you're hostile. You're oppressing the transaction. It's like you're damping the wave. So I think allowing in-kind creates and redemptions will be a big advance forward. When you allow people to trade options on them, you will eliminate or lessen the volatility and increase the ability to generate yield. And those two things are what you would expect in the maturation of the asset class as a security. So that's the first plank. I would say on a scale of 1 to 10 with regard to institutionalizing the asset, we're at a 6 there. and in terms of embracing. The second plank is fair accounting. Okay, if I wanted to keep you from buying anything, I would establish an accounting rule that said you can only lose money on the trade, but you can never make money. And that's a one-way ratchet. If I actually set up an accounting system where you always lose, you never win, and if you win, you have to act like you lost. And then if you lose again, you could win 99 times, but the 100th time you lose, you report one loss, no wins. Okay, that's just prejudicial and hostile. Okay, so indefinite intangible accounting allows you to lose but not win. And it's the kind of accounting you give to things you don't want people to buy. And so fair accounting was critical. And this January, it became optional. And next January, it will be mandatory. And so that's a big step forward. Let's just say we're 75% of the way along there, but we'll be sort of at 100% when you have 24 or 36 companies and they're all using the same fair value accounting and everybody's talking about it. And you start to see companies report multi-billion-dollar or 10 mega-billion-dollar gains on that accounting, right? That'll be a big deal. That's two. And then the third is if individuals aren't allowed to self-custody, that's hostile to Bitcoin. If I pass the law saying you can't custody, that's an attack on Bitcoin. If companies can't self-custody, that's an attack on Bitcoin. If I had a company whose job was to sell custody services to institutions, if I provided custody to Yale Endowment or to a big hedge fund, and then if the government had a law that made it illegal for the custodian to provide custody for your asset, that's hostile. So right now, SAB 121 is a rule that basically makes it impossible for a bank to custody Bitcoin. And the right way to look at it is, well, that's basically a regulation preventing companies that want to custody from custodying. And so the result of that is you have basically the government saying, I guess you can buy the ETF, but the ETF is not allowed to use their bank to custody the Bitcoin, and they can only use a crypto exchange to custody the Bitcoin, and we're going to sue the crypto exchange. And so when you have the government hostile to the crypto custodian, hostile to the banks, hostile to the institutional custodian, you're you're undermining the ETF industry, and you're undermining the asset. So the third plank is we just need for the SEC, the OCC, the FDIC to allow banks like JP Morgan and Citigroup and Goldman. But by the way, you might not like JP Morgan because of what the CEO has said. But let me guarantee you that within a year or 2 years of when it's possible to custody Bitcoin, JP Morgan will start a process to do that. And within 4 years, they'll be custodying Bitcoin because it's money, and that's what they do. So you want a world where Goldman Sachs, Morgan Stanley, Citigroup, JP Morgan can custody Bitcoin, because if they can custody it, they can buy it for you. And if they can buy it, they can sell it. And if they can buy it and sell it and custody it, they will give you a loan on it. And they will also give you yield on it. So the world after the banks can custody Bitcoin will be, I could have Bitcoin at a bank too big to fail, backed by $1 trillion balance sheet. They would give me 500 basis points of yield. You know how much money you get if you put your money in T-bills right now? You get 550 basis points risk-free. I think that the banks will give Bitcoiners 550 basis points risk-free when they can custody the Bitcoin. And so the world would be very different if you got paid 5% interest on your Bitcoin while you're actually holding the Bitcoin. And I think the other thing is they will give you a loan at SOFR, which is 550 basis points plus 50 basis points spread. So you can get a loan of 6% from Citibank or Bank of America when they can custody the Bitcoin. And then the third thing is they'll let you post the Bitcoin as collateral against your house or your mortgage, and you'll be able to I think refinance your mortgage maybe to 100% loan to value or 120% loan to value by putting the Bitcoin as collateral. Like right now, if you go to some of these banks and you had a $5 million house and you wanted to borrow money, they might say, well, I can loan you 70% or 60%. I'll loan you $3 million against the house at the best interest rate. It used to be 2.5%, by the way. When I told people to take mortgages and buy Bitcoin, Bitcoin was $40,000, and the mortgages were 2.5% interest. I took infinite crap for that, by the way, infinite. Well, so you want to borrow the $3 million. What they would say is, I'll give you a loan for $3 million against the house. Or I'll make the mortgage $5 million if you post some securities like Apple stock. If you want to post T-bills or Apple stock or the S&P ETF, they will give you a $5 million mortgage at 2.5% interest. And you could have done that with those institutional grade assets. Imagine a world where you can top up your mortgage with Bitcoin, borrow at 3 or 4 or 5% interest for 10 to 30 years, right? And what's the requirement? The bank's got to custody the Bitcoin. They got to recognize it as an asset that's just as good as Apple stock, just as good as a T-bill. And so I think, we're rippling where we get a couple more improvements on the ETFs. We'll be at 100%. A few years from now, we'll be at 100% in accounting, and people will be comfortable with that. Once the regulators, when they start to repeat what Robert F. Kennedy said yesterday and what Donald Trump said today, which is Bitcoin is digital property, Bitcoin is freedom, Bitcoin is virtuous, we're not going to sell our Bitcoin. When they say that, the banks pay attention. Okay, the banks, you got to look at this as the banks are looking to the regulator. The regulator is looking to the president, the administration. When the president says, this is sketchy stuff, it's used by criminals, the banks take that, and they pay attention. And you know what happens if you don't pay attention? The Signature and Silvergate Bank both actually were very pro-Bitcoin and pro-crypto, and they got out on a limb, and the regulators shut down the two banks, right? And so you can see why banks are conservative. You can see why public companies are conservative. The SEC, the CFTC, the OCC, and the FDIC matter. Political leadership matters. Rhetoric matters. So the words have changed. If Bitcoin is good for America, if it's good for the dollar, if it's good for the country's prosperity, if it's going to grow the economy, if that's the case, we're going to see all of those switches flip. Those all became catalysts. And now you have the 3 planks of institutional adoption. And now I want to make an observation. Citibank is based on National City Bank. And do you guys know the origin of National City Bank? The head of National City Bank was John D. Rockefeller's brother. And National City Bank was the bank set up by John D. Rockefeller because he didn't want to trust his money with J.P. Morgan. And so that happened more than 100 years ago. People that do business with these banks sometimes keep the same bank for 100 years. J.P. Morgan, Citibank, they're more than 100 years old. So a CFO, they want to do business with a bank they trust. And the world that I'm seeing is a world where Google generates $1 billion a month, and they send $1 billion a month to Citibank or J.P. Morgan, and they say, buy $1 billion of Bitcoin, and it's like $1 billion. Now it's $2 billion a month. Then Meta sends $1 billion a month. Then Microsoft sends $5 billion. And if you want to see a world where billions of dollars a month flow, and then it flows into the Bitcoin ecosystem, then it has to be with a bank that is too big to fail. When you're a $1 trillion company, you're not going to send your money to a bank that's the third-tier bank that isn't too big to fail, because your shareholders don't expect you to take that risk. So I think the catalyst is going to be banking acceptance. When that happens, you kind of look at that as, these are the high-power rails, right? These are the rails that move $1 billion a day, maybe $1 billion an hour, maybe $1 billion a minute, right? And when we get there, then I think Bitcoin takes its next leg up.
So enormous progress on the regulatory front. Yesterday, your keynote was phenomenal in highlighting the addressable market for global capital and how high the price of Bitcoin could go. You and I share the view that it's inevitable that it will go there. However, if we look out maybe 3 to 4 years and Bitcoin is lower than it is today, A, is that possible? B, does Bitcoin have keyman risk in Michael Saylor?
Okay, I'll answer there are two questions. The first question is, if Bitcoin is lower than it is right now in 4 years, you should count yourself lucky because you get to buy it. Okay? And by the way, that's not me. That's Warren Buffett speaking. Warren would say the same thing, right? Warren would be a Bitcoiner if he was just 40 years younger. Trust me. It's just, I'm probably not so open to the new, like, telepathic coin when I'm 99, or whatever. I might not be on stage talking about the new thing, but my point is Warren Buffett would say you shouldn't be sad when the price is lower. It's your opportunity to buy it. My second point, if you had a choice in this audience, and if I said, I know where Bitcoin's going, it's going to 13 million a coin, I'm willing to bet $15 billion on it, maybe 50 billion, maybe 100 billion on it. That's what I believe. Now, if I told you it's going to 13 million a coin tomorrow, how do you feel? What would you be thinking? Now, if I told you it'll go to 13 million a coin in 8 years, what are you thinking? Now, if I told you it's going to go to 13 million a coin in 21 years, what are you thinking? And let me tell you, what's the most valuable information in the world? It's not knowing what's going to happen tomorrow. In fact, if I told you it was going to go to 13 million in 21 years and it was going to go perfectly linearly with no volatility, is that better than if it goes to 13 million and it goes all over the place like this? And I'm going to give you my opinion. The worst thing is to know what happens tomorrow. If it goes to 13 million tomorrow, the only Bitcoin you're ever going to have is what you have in your pocket right now. And your thought is going to be, damn, I should have bought more. My second thought is, oh, all my family and friends, it's too late for them. They missed it. I feel really awful because I wanted to get them into it. The third thought is, wow, I don't have time to go refinance my house. The fourth thought is, well, how do I start a business and raise $1 billion to buy more Bitcoin? I'm not going to get that done by tomorrow morning. Fifth thought is, damn, I have all this money. It's not on the exchange. I can't wire it because banks are closed tonight. Okay, that's awful news. You don't want that. Okay? If I give you 8 years, okay, you have 8 years, but that's not enough time for everybody to get on board. If I give you 21 years and it's perfectly linear, that's awful too, because every stupid normie person that doesn't believe in Bitcoin, that doesn't understand what you understand, that has no conviction, they're going to get more Bitcoin than you because they're just this. Do you want the stupid, dumb money to buy all your Bitcoin before you buy it? No, you don't want it to be non-volatile. Here's what you want. You want it to be extremely volatile because that way you know something nobody else knows. I give you 21 years and you can go start a company, borrow money, raise capital, start a hedge fund, create a Bitcoin business, tell your friends, start a podcast, build a life for yourself, get leverage, mortgage your house, change the view of your bank. I'm giving you the ability to do work. It's a lever. It's a 21-year lever, okay? Like MicroStrategy's been working 4 years. If Bitcoin had gone from 10,000 to 65,000 on August 11th, on the day we announced our Bitcoin buy on August 10th, we wouldn't be worth 40 billion right now. We would be worth 4 billion right now. You see, so you want the lever, you want the time, and the second thing you want is you want massive volatility. Because, like for example, when Bitcoin went from 66,000 to 16,000, everybody else, had a crap, lost their minds, freaked out, and we doubled down, right? And it was a benefit for us. It was a problem for everybody else. We ripped up. And so you get the chance to prove yourself economically, and you get a chance to prove yourself intellectually, and you get a chance to prove yourself morally and ethically if you live through the volatility. You should pray for the volatility. When it goes away, you'll lose your advantage. And you should be happy that you know where everybody else on the planet's going to be in 21 years. You got a 21-year head start. That's a career. You can make a life out of that. And don't worry about the stuff that comes in the middle. It's a good thing.
Once Bitcoin's at 13 million a coin, there will be no more volatility.
No, when Bitcoin is 13 million a coin, if you look at my base case, Bitcoin is like 20-30% of the equity market. And so it's just big enough that the volatility is decreasing. But my model in my mind and what we're thinking is if the money supply expands at 7%, the equity index will expand about 10%. The volatility of the S&P index will be about 10 to 12. The volatility of Bitcoin will be 20 to 22. It'll always be more volatile. The performance will be 20 to 22 ARR. It'll always be higher performance, always be more volatile because it's an open, unregulated global market because it doesn't have the counterparty risks and it strips away the risk of a company and it strips away the entropic degradation of physical property. It's always going to be better. It's always going to be more volatile. And I'm not concerned about it. That's why even when Bitcoin's 13 million, you'd be stupid to sell your Bitcoin and buy the other stuff. The other stuff's always going to be inferior. And I didn't answer your last question, which is, key man risk. What if I go away? And I thought about it, and and what I would just say is, first of all, I don't have any heirs, but a nonprofit foundation, which will morph in being a public charity. So when I'm gone, my stock, my shares, my assets flow into a public charity whose mission is to support Bitcoin and the adoption of Bitcoin forever. And so you don't have to worry about MicroStrategy changing direction. You don't have to worry about, the truth is, I'm probably better for Bitcoin gone than here. Dead than alive. As long as if you're dead, you can't, what was the word? Murder? Was it slay your heroes? Slay your heroes. So Once I'm gone, I'm not going to be talking, so I can't give a bad tweet, I suppose. And MicroStrategy will just go on with the MicroStrategy. And the MicroStrategy is simple. It's raise capital from the institutions that have capital, buy Bitcoin, hold the Bitcoin forever, don't lose the Bitcoin, don't sell the Bitcoin.
So that's a great note to end on, Michael. Bitcoin is forever to the moon.
Thank you for everybody in the room. You do not sell your Bitcoin.